For the longest time, when we talked about the loss of nature, it always felt like, well, a problem for conservationists, right? But a really groundbreaking report from the Bank and Finance Consulting Group is forcing a major rethink. It argues that the decline of our natural world isn't just some ecological crisis on the side. No, it's quickly becoming a huge threat to the entire global financial system. And this is the core message right here. It's the big wake-up call from the report. This isn't a metaphor, it's a direct statement, a cause and effect. The stability of our economies is just fundamentally tied to the health of our ecosystems. So as those systems break down, our financial stability is put at risk. It's that simple. And the scale of this dependency it's staggering. The report finds that more than half, over 50% of the world's entire GDP is moderately or highly dependent on what are called ecosystem services. Think about things like bees pollinating our crops, forests giving us clean water, or oceans providing fish. These aren't just nice-to-haves. They're the absolute bedrock of trillions of dollars in economic activity. So, if our economy is so deeply tied to nature, you have to ask, why are we only just now seeing this as a financial risk? Well, for decades, the financial world has basically treated these natural assets like they were free and infinite. There was no price tag, no line item on a balance sheet for a healthy ecosystem. That whole view is changing, and it's changing fast. The pace of these natural shocks, things like collapsing fish stocks or the spread of new diseases, is making the economic cost just impossible to ignore. Markets and regulators are finally starting to connect the dots between a stable environment and a stable economy. Okay, so how exactly does a struggling ecosystem turn into a financial loss? The report breaks it down into three distinct but connected channels. It's a framework that might actually look pretty familiar if you follow climate risk. First up, there's physical risk. This is the most direct one. When pollinator populations crash, crop yields fall, and that threatens something like $500 billion in annual output. When forests are cleared, watersheds get damaged, and that leads to water scarcity for cities and industries. It's a direct hit to productivity and our supply chains. Second, you've got liability risk. This is basically where the damage you cause comes back to haunt you, legally and financially. We're seeing more and more lawsuits against big agribusiness and mining companies for environmental harm. Investors are starting to pull their capital from firms linked to deforestation. So this risk doesn't just affect your operations, it hits your reputation and your ability to get funding. And third, there's transition risk. Now this one is fascinating because it's the risk that comes from trying to solve the problem. As governments bring in new rules, like banning products linked to deforestation, and as consumers start demanding sustainable goods, entire business models can become obsolete overnight. This can create huge stranded assets in industries from palm oil to industrial fishing. So now that we kind of get the how, the next questions are obviously who and where. Which industries and which parts of the world are most exposed to all this? While the report actually pinpoints the specific hotspots right on the front lines of this financial threat. And the risk goes way beyond the obvious sectors. I mean, sure, agriculture, forestry, and fisheries are clearly highly exposed. But the impact also reaches industries like pharmaceuticals, where over half of modern medicines actually come from natural compounds. As species vanish, so does the potential for new life-saving drugs. And then there's the insurance industry, which is facing more and more claims from catastrophes like floods, which are made worse by losing natural defenses like mangrove forests. And just like some sectors are more vulnerable than others, certain parts of the world are way more exposed. The financial danger is really concentrated in the very places where biodiversity is the richest and where local economies depend on it the most. If you look at the geographic hotspots, the report's vulnerability index shows the highest risk is packed into places like small island states, which rely on coral reefs for tourism and storm protection. And then you have sub-Saharan Africa, where over 60% of jobs are in agriculture. Critical regions like the Amazon and Southeast Asia are also extremely vulnerable, as things like deforestation and marine degradation threaten their entire economies. So what's the crucial point here? With this massive risk now being identified, the financial world is finally starting to react. We are seeing the dawn of a whole new era of innovation, all aimed at measuring, managing, and hopefully mitigating the financial risks that are tied to nature. New frameworks and tools are popping up all over the place. The Task Force on Nature-Related Financial Disclosures, or TNFD, is creating a system for companies to report their nature-related risks, kind of like they already do for the climate. And you've got these really innovative financial instruments like biodiversity bonds and debt for nature swaps that are designed to channel money towards conservation and restoration. So all of this brings us to a final, really critical question. For the very first time, we are systematically trying to put the value of nature onto the global balance sheet. And as this huge shift happens, it's going to create a whole new set of economic winners and losers, forcing us all to ask, who's ultimately going to profit from this new kind of accounting, and who is going to be left to pay the price?